The bottom is in. Yup, I'm calling it. The bottom is in for houses like ground-based homes, detached semis, and towns. And we're very likely not going to see like the aggregate freehold average price come down outside of the normal seasonality, basically August and December, right? So the sentiment right now I see for homeowners is changing a lot because of, 3 consecutive rate cuts. And this is why I'm going to show you, backing up with the data that I'm seeing right now on top of the stuff, I'm talking to other clients and potential clients, and why that the fact if you're contemplating buying a freehold in the near future, this is probably the signal you're waiting for. The bottom is here. And if this is you and you want to talk about your unique situation, you can do so by booking a call with me using a link that's on the screen. It's right here, www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. Yeah, the bottom's in. It's a very big, bold statement. I'm making it out right now. Freehold prices have bottomed, right? And let me show you why on this edition of the Market Watch. So this chart right here is basically the average price, which again, like it's inclusive of condos and houses, so like freehold as well, right? And you can kind of see that we're slowly trending downwards, right? And the current average price right now is like $1,082,000, like give or take, like a few $1,000, right? Last year, we're a little bit shy of $1,080,000. So, like we're up $3,000, give or take, which is essentially the same, right? So prices haven't moved. The sentiment right now is changing. I would say we're out of peak fear now because, clearly that we're heading for a large rate cutting cycle due to a non-technical recession, but it's real, per capita recession clearly happening. The signal that affordability is better due to rate cut is clearly here. However, I do not think we're going to be skyrocketing back to call it 2021 pandemic norms or like Q1 2022. When we get back to those, peak prices, I don't know, right? Because of the recession. But I do not foresee freehold homes. Again, ground-based homes, not condos, like detached, semis, and town. I want to make that very clear right now. Again, I don't think we're going back lower than what this price is right now, right? When we get back up there, who knows? I don't know. We could trade sideways for 5 to 10 years like we did in the 90s, right? But I just don't think we're going back to kind of like lower than $1,080,000, give or take, an average price. So yes, while I know those who may lose their jobs will have a hard time holding onto their properties because, they lost their job, right? But I don't think there's going to be enough of that cohort of people that's going to move the needle. Like right now, I think most people who may lose their job can probably brace for it with a lower interest rate. And then on top of that, currently, freehold inventory is pretty good, like normal, right? Now this chart here talks about the absorption rate for homes in, the greater Toronto area, and that little like white dotted line at the bottom, that's basically 2024. So like essentially it's never been this low. The question I keep asking myself in the last month is, how are prices exactly where they are last year when we have the lowest absorption rate ever for like the entire year, right? Nobody is buying. Next, the reason why the absorption rate is so low now isn't because we have an abundance of new listings, right? Because as you can see in this chart, it's normal, right? It's actually rather normal. The problem lies in this chart here, which is that we have very low sales. And when you have low sales, right, with normal amount of new listings, which includes a lot of properties being relisted, the existing inventory kind of piles up and gets larger, right? And this is why you can see in this chart, we're abnormally high for active listings. Nothing's just being bought. We have a normal amount of listings. And the point I'm trying to get here is that this has been happening for the last few months already, right? But the key difference right now is that the sentiment is changing with these rate cuts. A lot of people are like, oh, I see, right? And I foresee that, the active listings probably staying high in September for now. And again, this is why I'm making this video. But come October and November, I think this number is going to fall quite a bit. And then come December, it's going to fall off a cliff as we normally do, right? Because at the end of like November, when the fall market's concluded, I actually think we're going to have the highest price point for the year. So right now, in the first week of September, a lot of the properties I'm seeing on the market are, essentially relist, maybe like 50% of them, stuff that essentially hasn't sold in September or spring, and they're just like, putting on the market, right? A lot of them are reducing their price, but some are not, right? Not much new product. So either these listed properties adjust the real price, the current market price, not, peak 2022 prices, or they're just going to, give up and terminate by the end of the year in December and hold on to the property because rates are lower, right? That's why, I suspect on this chart will gradually go down by the end of the year, right? And this is also why I suspect the months of, inventory, like that number, is also going to start trending downwards as well. But it's going to be like, ballooned up, I'd say, by the condos. Now, here's an interesting chart I've never shown people before. The reason why I'm showing this is most people agree that, spring is the best time to sell because often it's the highest price of the year, right? So you can see in this chart, May makes up a big bulk. However, most people don't understand that the fall market, being September, October, November, is also very strong, but it's just condensed, right? So you can see that of the 29 years since the Toronto Real Estate Board has been tracking this data, 9 of the 29 years, the highest price in that year was actually in the fall. That's effectively a 30% hit chance. So whether this fall it's the highest price in October or November, I don't know, but I really do think the highest price point, like average price, will happen in November or October. Now here's kind of where my explanation will get nerdier, I guess, regarding also why statistically the average price is likely to go up, right? So in most months, most sales make up like a combination of like condos and freeholds, right? So it's usually like 65 to 70% freehold and like 30 to 35% of that is condos. Now, right now, because there's a shift towards freehold, a lot of people are trying to get back in. Not people are buying in condos right now. I think there's going to be a skew towards the freehold. And as everyone knows, freehold is more expensive in the GTA and likely drag up, the prices on the average price metric, right? So this is another reason why I think that the average price is probably going to get pretty high in October or November once, the fall market has concluded. So when you kind of look at all of these things, I kind of just explained, sentiment, the way that the stats are lining up, the way the sentiment's going and the rate cuts, you can kind of see why I'm saying, look, I really don't think there's going to be that much room for the average price for like a freehold home to go down anymore, right? And this is exactly why I'm pointing out all these things for you to say that, look, there's a very high likelihood, right, that August is probably the bottom of the average price, right? I don't think it's going to get any worse from here. So I hope this video gives you an idea of kind of like my thoughts on what's happening in the market. I know a lot of people that are, proverbial real estate bears will disagree with me on this and think that the market's going to crash another 30 to 50%. Good luck. You don't know what that's going to cause to the banking world if that happens. But again, these are just kind of like my thoughts that are percolating in August. I was kind of itching to share with you, right? So if you are on the fence right now and are waiting to see kind of where the market heads for the freehold space, specifically the freehold space, right? Now is probably the time to really, really consider what you're planning to do because there are a lot of signals saying that I think we've hit the bottom, right? And if you do want to chat about your unique situation about the freehold space, you could do so by booking a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.